Dear traders, ladies and gentlemen, welcome. This is episode 17 of our MCA Trading Made Simple series. This is a topic which is pretty old, namely to distinguish between an inner range and an outer range scenario. To be fair, once we introduced the squeeze indicator many years ago, it's very easy to see the dumb money tolerance directly via the squeeze indicator. But nevertheless, I thought it's a good idea also for completeness to at least make a short video about this topic. It's really not difficult to understand, okay? It's basically distinguishing between a scenario where the price is literally within a certain range, okay? And one where the price is outside of the range and it's just making new lows or making new highs, okay? As we know, this is related to squeezes, of course. But anyways, let's go step by step. So, this is what? Inner range or outer range? You guessed it, it's inner range, okay? Because the price has been around those levels, so this is all within range scenarios. Let's look at real life examples. This is a nice 4-hour reversal channel, as we have discussed before. Okay, you see nice 4-hour reversals. All of this is, you guessed it, inner range. Okay, we have a clear price range, the price moves within it, and therefore the dumb money tolerance is high. Okay, that's what this is really about. We come to that in a second. Here we see a scenario where the price turns into outer range. Okay, there is a squeeze going on. We have a short squeeze. Dumb money sellers in the market. The price breaks out, breaks the complete range even on the day chart. Okay, this is the important aspect. This was a day chart range even, not only on the lower time frames. Breaks out and completely runs away. We had an outer range scenario. Why is that so important? Because of this. Because of the dumb money tolerance. Okay, because surprise surprise, in the inner range scenario the dumb money tolerance is lower. Okay, the algos will pay attention to where we have the dumb money sellers and the dumb money buyers. Okay, however, in an outer range scenario the dumb money tolerance is higher. Okay, and in the vast majority of cases you see that directly because, for example, we have a squeeze going on against the dumb money longies. So there's little, so the longies get killed. However, here's the important part I wanted to come to. Overall, the dumb money tolerance is higher. Why? Think about it. If the price moved so much, okay, and there are some dumb money traders now entering the market, these can easily be within the dumb money tolerance. Like here, let's say we have a squeeze against the longies, and some shorties come in, then some of those shorties will actually be allowed to win. You understand? So I'm trying to describe a scenario here where you see sometimes the dumb money being allowed into profit. You see what I mean? Now, it gets even a bit more complicated than that. Up to the point where, especially after large moves outside of the range, we may see examples where we even have some dumb money longies entering and the price doing a pullback, and those longies even are allowed into profit too. Why? Because, think about it, if the price run hundreds of pips in one direction, okay, the main targets are all fulfilled. They took the LTS. They caught it, like in this example here, many dumb money longies, dumb money buyers. They are all in drawdown. With each pip further down, they get more and more into loss. They get kicked out, they get margin calls, they get their stops taken out, and so on and so on. So if the price is down here after 200, 300 pips, okay, we are far away from the range, so therefore the dumb money tolerance is high. There's a high tolerance for dumb money coming in then. Because you could even explain that from a more common sense perspective. You could say, look, these guys who bought in the end, they waited a 300 pip move until they got a really cheap price, and if they are sticky, they may have even gotten a bit into profit when they bought this crazy move after it took out all the LTS and did what it needed to do. You see what I mean? They are within the dumb money tolerance. There are very few buyers who are then allowed to win. And as in the scenario I described before that, okay, if we have a squeeze against the longies, okay, the longies are caught, they're getting killed. If some shorties go on the right side, they may take out some profits, some pips out of this massive move, because they were, by chance for them, placed on the correct side overall. They didn't know that there was a long squeeze, so they got lucky that they sold into that, you see. Now, last time we have explained the smart, semi-smart money indicator, and guess what? Of course you can see, especially those traders there. That's why it's so powerful if you start combining all the different components of the market causality. Because, surprise, surprise, you're going to see semi-smart shorties on that particular indicator, okay, selling into this and actually getting into profit, these guys. You see? And the same can be true for, let's say, some longies who come in the very end. Okay, once all the targets have been taken and the longies enter, the semi-smart longies, they can also get into profit. So you see, like, even though this discussion started really basic, we see one of the examples where some of the dumb money traders are actually allowed to win a little bit. That is why it's actually not that unimportant. Because you see many of the components explained in action here. You see the interaction of different indicators and components of the market causality. And look how everything makes complete sense, okay? I always want you to take a step back and to look at all of that from a common sense perspective so that everything in your brain is aligned. Because concepts which at the beginning feel a little bit counterintuitive then become very intuitive. Yeah? Because if you take out all these details, you could literally explain these things in a very simplified manner, okay? You could literally say, like, well, okay, where the squeeze against the longies and some shorties came in on the right side. They can't do so consistently, but in this case, they were lucky to do so, okay? Okay, yeah, so that's not rocket science, okay? Or in the other example, and by the way, the ones who paid attention and have watched the video course, they would say, wait a second, we often see also a collapse in the squeeze line. That's correct, okay? Like often for those kind of trades, you indeed see the squeeze collapsing, okay? And then, this means that most of the longies either got stopped out, yeah, or they closed in a loss, so they cashed in the drawdown, or if they were also over leveraged, they got a margin call, etc. Yeah. So what happens if then you have these longies coming in once the battle is over? Exceptionally, they could be lucky because they are within the dumb money tolerance after such a move. Yeah? You see, these are experienced traders who know that the low has been retested already. We have the W, and then at some point things are actually switching and we have the reversal. And some of them may actually get a profit out of this. You see, so now you see really the power of the causality unfolding, because we have objective information in front of our nose, all we got to do is just to interpret live each market according to those very logical and actually straightforward principles. It's not rocket science, is it? It's a smart money trying to crash the dumb money, as literal as that. That's where it starts and where it ends. Yeah? Anyways, I think that's enough for now. This actually turned into more interesting examples than I had planned, but why not? You know, this is what it comes down to. This, as a footnote here, this is why we ourselves, we don't trade for our reversals against a squeeze. Only if the squeeze is starting to collapse, okay? Then we consider ourselves to buy. We don't do so before. Watch the video on H4 reversals and all the other videos, of course, okay? Where I go into more detail regarding these things. Yeah? As always, if you like these kind of things, please get the MK video course. It's very good, it's very cheap. And there I will talk in length about those kind of topics in separated videos. I think there are hours and hours of material there, and I also give examples. This here is just a quick summary so that people who are new can get started and go through these things step by step to get a really nice basic understanding of the market causality, and they can take it from there. Okay, that's the whole idea. And also the people, traders, getting a flavor for the advanced approach and the quality of the MK web. Okay, I mean, especially traders who understand how this game works, they are often quite impressed with these things, okay, to see how worked out it is. And by the way, I don't want to get ahead of myself, but what we're going to do in one of the last videos is we're gonna talk about the conscious level of traders, because guess what? Yeah, can you imagine? And I will just briefly talk about this now, but can you imagine, like, while there are traders on a very high consciousness level who are considering, yeah, whether we have a dumb money tolerance or a squeeze or an MTS run or an OST run and order gap zone run, whatever it is, yeah. They are discussing whether we have a pre-run counter scenario, okay, whether we have time range principle, and so on and so on. Then there are people down here on this pyramid who are not even understanding that markets are manipulated and they believe in supply and demand. You understand what I mean? Okay, so I will make a nice or complete curve for one of the last videos of this series. But you understand my point, like explained very roughly. Like these traders, some of them are still believing in the supply and demand lie. And you first gotta convince them that this is not how Forex works in 2025. And then on the other side of the spectrum, we literally have like advanced market causality traders who use the market causality analysis and approach to determine like high level manipulation aspects. Yeah, will they first take the counter stop and then the main target? Will they first fill the option strike targets? Will they first take the STS? Will they kill the squeeze, kill the dumb money in the squeeze? Will they do a forward reversal? Do we have a dumb money switch? Do we have some of the dumb money in net profit according to the net loss indicator? Do we have over leveraged dumb money? You know what I mean? Like, you know what I'm trying to say? We have highly advanced traders who are analyzing the market on some meter levels, and then you have like really low consciousness traders who, bless them, didn't either have a chance to understand any of that or never had an insight. And all I can say, and this is maybe the last thing I want to say in this video, all I can say is, if you are on the other side of the spectrum still and you are sleeping, my dear, okay? Because to be fair, and I would like to say that, when I became a trader, you know the first thing I did? I went to a library and I bought any book on trading I could find. And I wasn't impressed. Most of it was pretty useless. But I wanted to know what's out there. I did a proactive effort to understand what is out there. I didn't want a blind spot in my education. I didn't want to be ignorant towards any concept somebody may have uncovered already. Okay? Now, if you apply this to now in 2025, if you haven't found my work here on this channel and all that, then that's a blind spot. Okay? You haven't done your homework, because you should look for these things. If you really went deep in FX and you really have a passion for that, you will find these open secrets like this one here. Okay? As simple as that. That's maybe a self-selecting mechanism as well. Okay, because the ones who are looking to go as deep as possible. We live in a very superficial time. Everyone just has surface knowledge. They tell each other stories without doing research. But if you're really serious about FX, you want to go deep, and you want to know, why does euro dollar really go up 30 pips and then 6 pips down? Why? You will find the truth. Okay? And this truth, and that's the last thing I want to say, is backed up by hardcore evidence. Okay? Still on this channel you find this, when I was trading live on YouTube over almost 2 years, you find my live analysis from over a year ago. We have more than 1,100 videos now. You know what I mean? This is no joke. So there is no question whether it is like that. It's documented literally in real time. So if you have no clue, it's your problem. It's your blind spot. You understand? That's what I'm trying to say. And I say that in a friendly way, because it may not even be your fault. However, once you discover that, then please go all the way and learn everything so you can be up here. Okay? And you can beat the algos and not be part of the losing mass. Okay, that turned a bit into a rant, and it wasn't my plan, but why not? You know, sometimes you have to go with the flow. Lots of love, take care, stay safe.